The Dow was down around 800 points at its lows of the day, and it's now down 114. You can kind of see the movement more steadily to the upside throughout the course of the afternoon. And by the way, the yield on the 10-year Treasury note is still slightly lower on the day so far. So if you take a look at all of that in context, 4.183, we're still below 4.2. With that, we're going to get out to Rick Santelli in Chicago for more on today's big economic data. I'll send things down to you, Rick.
Well, thank you, Dom. You know, what a wild day in terms of data, though. We get hot GDP price action, even though the growth aspect was negative. We get cooler PCE outside of the revisions, which Jerome was talking about are still hot in the rearview mirror, and yields are well off their high yields. What did you think of today's data, Jerome?
Ultimately, I most importantly pay attention to the revisions on the inflation side, and that still portends an environment where inflation is still moving upward. About 3.5% core PCE is something that we really need to be paying attention to, and there's potential for it to grow up, move higher in the longer term. So that's really going to be a focal point for the Federal Reserve, at least in the near term, and perhaps create tension at odds with jobs outlooks and things like that. Obviously, the ADP was somewhat disappointing today, but let's focus on the facts. At least in the near term, job growth is remaining relatively resilient. That creates a tension for the Federal Reserve and probably leans itself into perhaps focusing on the inflation fight, at least for the near term, until later this year when things might turn.
You know, they had that old soda commercial, tastes great, less filling. So inflationary pressures or less growth, and this is going to be a debate going back and forth. I happen to agree with you, but it certainly seems, though, since this administration's been in power, the Fed's paying a whole lot more attention to inflation. I guess the uncertainty does fuel that line of thinking.
Well, it's also at the consumer level. On one hand, you see the consumers acting very robustly in terms of bringing home all the goods before the tariffs, and that still remains intact. It's probably supporting growth, at least here in the near term.
Well, that's the big reason that GDP today, even down 0.3, maybe the U-turn in yields was because 4.8% of that was related to imports.
Absolutely. That's part of it. But the other part of the equation is purchasing power. And investors consumers are really focusing on the purchasing power element of what the power of the dollar is going to be, not just today, but in the future. The important thing for investors and the markets to pay attention to is what are those inflationary expectations longer term? And more importantly, how do markets and how do investors adapt to that? And that's simply one of the reasons that you look at the environment today, you see the yield curve, you see it steepening, and there's a variety of opportunities in those yields and that income.
You know, normally I love yield curve steepening. It's a good thing. But I like bear steepening. I like when yields are going up in the curve steepening. What we've seen lately is most likely induced by this fantasy about 4 eases by the Fed.
Without a doubt. We've seen a bull steepening in this regard, meaning the Federal Reserve is expected by the markets to continue to cut rates. At PIMCO, we think that's going to be a little bit more elongated, pushing it to later this year, maybe even more aggressively in 2026. But the key here is that let's not bet on the meeting to meeting of the Fed. We need to really focus on where is the opportunity here. The opportunity here is focus on the opportunity for higher yields at the front end.
Capital preservation.
And finding ways to produce income across all varieties of fixed
Sounds
income
like
without the
fixed
uncertainty.
income and credit markets are your choice.
Unfortunately, with the certainty right now.
Well, thinking it's PIMCO, that makes perfect sense. Jerome Schneider, thank you for joining me on the SIBO. Dom Chu, back to you.
All right, have an offline conversation with Jerome, by the way, about used cars. That was what we talked about the last.